Hey, what's going on, everyone? This is Sawcruhteez Streamz, and I am your host, Tyler Coates. I appreciate everybody for tuning in today. We've got a good show planned with a lot to talk about. I'm going to be taking a very close look at the price of Bitcoin and going to be looking at some longer time frame stuff as well as some shorter time frame stuff to get a feel for what we think may be happening in the next days to weeks, and then also within the next few months. So with that being said, I don't want to waste too much time here before diving into the charts. Got my notes here. Want to say hi to everybody in the chat. Good to see you. Gerald Moses, Green Lion, Leo Money, Henry Schenk, probably not Paul, Joker, ACDC. Good to see you guys. And yeah, with that being said, I'm just going to jump into some charts here. We've got the Bitcoin weekly chart pulled up, and we're going to go through starting out the question that we're going to try to answer is this an opportunity to buy a dip in a bull market, or is this the first signs of a bull trend kind of reversing into what would be a bear trend? And if that's the case, then this the implication would be that this is not a time to buy a dip in a bull market, that it would be potentially time to start selling bounces. And I'm not coming to either of those conclusions just yet. That's what we're going to be looking at here. So those of you that have been following me for a while know that I have three main tools that I use to determine trend, and that is those are tools that I would use religiously to check to help me to see, is this a time to buy a dip in a bull market, or is it actually a reversal, a dip that has gone on long enough or far enough that it would actually be a reversal instead of a dip. And that is the Ichimoku cloud, the weekly parabolic SAR, and the 4-hour 50 and 200 EMAs. I like to see all of those line up in the same direction. When that's the case, it tells me that we've got a trend, and that it is a good time to enter during counter trend corrections. When those start to get out of line with one another, when you have, say, the weekly parabolic SAR saying that it is a bull trend and the daily cloud saying it's a bear trend, well, now we're in a situation where not everything is lining up, and potentially it is time to wait on the sidelines for further confirmation, or potentially it's just time to know when each indicator, where it fits on the hierarchy, so that when they oppose each other, you know what takes precedence. And since getting the new version of MSR developed, MSR Trader Mode, that's basically all that I have been using, is just that, and that's really the only thing that I need myself. I don't really care what anybody else is, what anything else is saying. If the cloud and the SAR and the EMAs aren't all lined up, but the MSR is signaling a trend versus a no trend, then that's a spot where I'm going to be going ahead and executing, or waiting for further development. That being the case, I still like to take a look at some of my favorite tools to get a feel for how they line up with what I use. So we will be looking at all of those. Let's go ahead and start with the weekly parabolic SAR. Turn bullish up in here, and is got a lot of room for this to stay in a bull trend. Kind of reminds me of something even more significant than up in here, but I remember when the price was down in here and the SAR is all the way up here. I remember kind of chatting with Tone on his show and him being like, man, that is just way too far away for me. We're down here at 10,000. I don't want to have to wait for it to get all the way up to 13,000 before it reverses a trend. And I was and am of the strong opinion that that this is telling us a lot of information. When the SAR is really far away from the price, it tells us there's a lot of room for a counter trend correction. So for example, this was a record day in Bitcoin back in October that took it from something like 73 up to like over 10,000, something along those lines in a 24-hour period. We'd never seen Bitcoin increase that much in a 24-hour period. yet the SAR didn't flinch. It said that we are bear market the whole way through, and it wasn't even that close to reversing that. So when you have the SAR that is this far away from the price, it tells you there's a lot of room for a counter trend correction to occur to maintain that trend. So for example, right now we could go down to like 62 or so, depending on how long it takes to get there. This will continue to progress up. So if we fell straight down, that would be a different price than if it, went that way. So either way, you can see that we've got a lot of room down in here to have a significant counter trend correction, and for the parabolic SAR to say this is still a bull trend as long as we are above. Right now it's at 53.60. It's increasing by only about $200. So I mean, next week it would be all the way, I'd expect it to be around 57. So in the next 2 weeks we could go somewhere down to 59.50, 6,000, and still keep this intact, still keep it bullish. So that's very interesting to me. That tells me that that while we are in a bull trend based on the weekly parabolic SAR, it's telling us that there's a lot of room for a counter trend correction, which there could be some implications there that could tell you this is a good time to maybe look to take a little profit and buy back on one of those big counter trend corrections. Or maybe it's just one of those times that tells you I need to kind of decrease risk a little bit so that I am not losing too much in the event that this turns against me, and I have to give it this whole area to let it ride. If you're using the parabolic SAR as your stop and you're having to let it ride down to 6,000 along, well, then you need to be aware of that ahead of time so that you can use that to properly determine your exposure, so that you are not over leveraged or overexposed, such that when price does get down here and you should be holding and letting it ride, you're getting liquidated or losing just so much that you have to capitulate, something along those lines. So very important to be aware of where this SAR is as far as I'm concerned. That's about all I have to say about that. Let's take a look at the cloud. So we've got one of the tools is fully bullish with a lot of room, meaning it's pretty strong position to make a big move and still have plenty of counter trend corrections in there. And what do we see with the cloud? The cloud got a bearish TK cross right here on the 14th. Price re-entered the cloud right here on the 26th. So this will be your take profit on long signal. This could be a short signal if you're going edge to edge. So you would enter on the close inside the cloud, target a return to the other edge of the cloud. Stop loss as they close back outside of that cloud. And then if it does close below the cloud, that would be a full short entry with, now we've got a bearish Kumo twist, bearish TK cross, price inside the cloud. Only thing that would be left to turn this fully bullish is for price to break down the cloud. So that will be interesting to see if that happens. So that's right now telling me that we're not in nearly as strong of a posture as we were, say, 2 weeks ago. 2 weeks ago, we had the cloud fully bullish and the weekly SAR bullish, and also the moving average is bullish. So back in here, everything was lining up, telling us it was an opportunity to buy a dip. And here, price isn't much different. I mean, now we're down at 9,000 opposed to 92.50. So price is still in a very similar area, but the key is that it spent time down here. Trends can be reversed by spending too much time without advancing and continuing, or by moving too far down. So, we could move straight down and reverse by, sharply moving down. Or if you just kind of meander sideways for long enough, that's going to be enough to start to put the trend in danger of fully reversing. So right now we are in a much different position than we were a couple weeks ago, being that the cloud is not showing us the same thing as the weekly parabolic SAR. Let's take a look at the weekly cloud, and those of you that haven't been following along for a while, I use specific time frames for these indicators, and it's the weekly parabolic SAR. The daily cloud is the most important to me, and then the 4-hour, 50 and 200 EMAs, very important reasons for that. And that being said, I will still take a look at other time frames, like for example, the weekly cloud for me is just too slow. It's a great tool to confirm, but it's too slow to use to identify like tops and bottoms. And this is traditional settings. I never use double settings. I do not like double settings. And that's after using them for a long time and coming to a strong belief that single is better. So if anything is going to be lagging, then you would think, okay, well, maybe it's because double settings. No, it's not because of double settings. It is because the weekly cloud just moves a little bit too slow. Not turning bearish in 2018 until we were all the way down at like 66, 65, whereas we had the daily cloud, the 4-hour EMAs, and the weekly SAR all turned bearish up around like 12,000. So like a bit of basically 100% difference in price if you were using the weekly cloud versus if we were using the daily cloud. Again, right here is where you got it turned fully bearish, 12,500. Big difference. And again, here's your take profit signal, is even better price. So strongly prefer the daily cloud, but I will use the weekly to confirm for sure. And here we're seeing something pretty darn interesting. Couple things. First is this C clamp, which does not look good for bulls. This is an indication that we should revert to the mean. The price is overbought, that we moved up too quick, and now we need to revert to the mean, is what is indicated when we get a C clamp. And a C clamp occurs when the Tenkan-sen gets extended and diverted from the Kijun-sen, and it will give you kind of that C action. So that is a C clamp calling for a reversion to the mean, with the flat Kijun-sen would be the target for me there at 71.81. So that is very interesting to see that the weekly cloud is indicating a need to revert to the mean around 71.90. And the weekly SAR is saying that, yeah, that'd be totally fine. We've got plenty of room to come back down there and to keep this fully in a bullish posture. So that's the kind of thing that I like to look for, is when the SAR is telling me there's a lot of room for a correction, then I'm going to want to look for other tools that are telling me that maybe that correction is coming. So I've laid out a lot of reasons so far why 9,000 may not be holding, but I actually, if I had a gun to my head and I had to say if I thought 9,000 would hold or if it wouldn't, I'm still feeling like it should. So there are a number of tools that are indicating a potential for a move down to mid-sevens or so. And when I started this show, we were above 9,000. So this has been this can definitely change what I'm thinking and what I'm feeling here if we are failing to find strong support at 9,000. I think the title of the show is Will 9,000 hold or not? And it looked like it was. Let's just go to a little bit of a smaller time frame. Right now it is a quarter after, so I started this show right on this candle. So right here, a lot different than what we're seeing right here, being that we had price come down to test horizontal support, and it was holding real nice. So let's see here. And it looks like that might be a nice shakeout. That's a sharp reaction with a nice wick. So what I was looking at before, like let's just say right here, what I was looking at was that we had this move down that took out these stops. Anybody that was using 9,000, these lows, got stopped out on this, and it really looked like a run on stops because we came down and we instantly popped back up. We fell below 9 and instantly popped back above, and not only that, we then turned it into support. So that was looking really good. like, okay, here's our shakeout, and then we were continuing, so it was still looking really good, and then we were starting to turn prior resistance into support, all looking really good, and then we got another pop back up. So this was all looking real good to me. Creating higher highs, higher lows, turning resistance into support, following through, and then here is where it was still looking okay, being that we came back down to retest horizontal support, and we fell below this horizontal at 90.25, but we really failed to hang out below there. You see in these wicks below, a bunch of closes above, so we're maintaining this as a critical area of support, which really changed on this candle, because now this candle has created a new low below the low of July 2nd. So now the question is, are we just getting shakeout after shakeout after shakeout, scaring people out of their longs here around the worst price, or is this the first signs of it actually cracking? And this sure looks like another shakeout to me so far. We're only 5 minutes into the candle, so if we close the candle down here, it's going to be a lot different than if we close it up here. So I would be wanting to watch for, right now, is a close above 89.50, and in the next hour to get it back above 9,000. If that happens, then we're getting some strong signs that that these are just shakeouts down around here. But if we start spending too much time below 9,000, that's where it really starts to lead me to believe that what was a shakeout, what may look like a shakeout, actually isn't, because if there is a shakeout, then the price should not be there for very long at all. It should be there for a blink of an eye, and it should get bought up so quickly that if you weren't ready with orders there, basically, that you miss out, that you don't get that price. And if you have a situation where price dumps below and then it just hangs there and doesn't, and it's like, oh, I could have gotten that price 5 minutes ago, I can still get it now, it's sure not getting this reaction that I would want to see to tell me that there was so much overwhelming supply that it was anybody that sold just sold at the worst time. So that's how I think of it, is just getting a feel for what shakeouts, how quickly and sharply they do generally react, versus when it's a real breakdown, how long does that price just kind of stay there and hang out there, or just make a big sharp move below. So as it stands right now, I am seeing a lot of support below 9,000, and until we turn that into resistance, I'm going to be feeling like it's going to hold. There is a lot of reason to believe that we can correct down to the mid sevens or so in very short order, but I am just really firmly of the belief that there is a much greater probability of shakeouts right now following the halving than there would be any other time. So as I keep seeing price come down and test 9,000 and keep getting bought up very quickly and decisively, it's telling me that, you know, there's strong supply, that the bears are strong, but the bulls just are not giving up, that they're just if they just keep buying up everything that goes under 9,000, it doesn't matter how much the bears are trying to push this thing down. If the supply is, if the demand just overwhelms the supply below 9,000, then that's going to create a situation where every time we get down there, you just hit your head into a wall before turning back around. And that's what I've been seeing so far, is that yes, my ascending triangle is no longer intact, and here's the thing, is this is where, in my opinion, we were very much in danger of breaking down. It was this reaction following the move on June 27th that really made me think that we are going to have a hard time breaking down 9,000, because right here we had every reason in the world to do so, as far as I'm concerned. we've got this trend line gets broken down, it turns into resistance, and then you create a new low. That's basically everything that I would look for to say a trend line's broken and that you should basically continue downward from here, is to close below, throw back, turn into resistance, create a new low below this, and create new lows below these guys. And that's where you should really see a cascade of price, potentially a candle like this, where you get below where a lot of people are using, even conservative stops would be set below this candle right here. And then when you take out that low, and instead of it just really following through and making that big move down, instead it immediately pops back. And that's what's been happening pretty much every time we take out a low and we pop back. Take out a low, pop back. So here we just took out this low. It'll be very interesting to see. Each time we've taken out a low around 9,000, there's been no follow through. And that tells me there's been either, bears are getting less interested in selling there, or there's just so much support down there that they can't follow through no matter how hard they try doing so. So that's where I was really wanting to see us build off of this right here, because it's like if you just keep looking at thinking, okay, this is a trap, this is a trap, this is a trap, eventually the price has got to do something. You can't like say, okay, here's our trap, and then oh, here's a trap too, and another trap, and another trap. But if you're too convinced that every move against you is a trap, then you're going to end up holding a big bag almost certainly. And that's where I pay very, very close attention to traps and to the telltale signs of shakeouts and that sort of thing, but I can't get carried away. And this is where it almost is starting to get carried away, because this is our area where I really think we should follow through, and it doesn't, and it sharply reacts back above 9. Okay, so that really looks like it's a trap, and if that's the case, we should keep building. This was where instead of instead of building and grinding up, we dumped right here and have kind of continued down. So this was where I had a pretty high degree of confidence that we had a nice shakeout and we were ready to grind up and get all the way back up into these levels in pretty short order. And now that we've taken out this and we continue to just play around with flirting with taking out these lows, that is really getting to the end of where I could consider this to be just a head fake below 9,000 that's going to continue holding. If it takes out this low at 88.50, there's going to be very little reason for me to believe that support is holding at the 9,000 area. So here I'm going to be paying very close attention for this reaction right here. As long as we keep getting these wicks that come below lows and get reactions back up, it'll be looking good. But eventually we need to basically put our foot in the ground and start marching forward and not allow these to keep happening. If they can just keep, if traps happen one too many times, then all of a sudden the rug gets pulled out, and that is something that I'm definitely going to be paying very close attention to, and will be using MSR to help me. And I think the last show was right here when I was mentioning that this was where I really thought that it was a perfect trap, taking out all the lows. Part of the reason was because it found support at the ocean, and this was something I mentioned ahead of time in Telegram, was that, okay, we're getting a death cross with the moving averages. If we can support the ocean and then reclaim the moving averages, then everything should be in good shape to continue higher. Whereas if we fail to support the ocean, Or if we fail to reclaim the moving averages, then it's starting to really give us signs that the bears are taking over. And everything was looking good until, bam, that 200 EMA just held as strong resistance on that bounce. But we're still hanging out in the beach above the ocean. Thing is that now the 50 is starting to act as resistance. So I am really needing to see this 4-hour reclaim the 200 EMA around 92.50 in pretty short order. Otherwise, I'm going to be looking to exit and with a plan to get back in at a better price. My cost basis right now is right around 9,000. So if things don't play out how I want, I am going to be quick to exit and then look to layer some orders from around 75 to 8,000 or so. Okay, take a look at the chat. All right, I will continue moving along here. So it's kind of given the idea of what I'm looking for over the next couple weeks to month or so. And something that could definitely change that is how we react to this trend line here. And this is part of the reason why I have not been worried to see the ascending triangle break down is twofold. Because of the action I discussed, that we have been getting strong signs of shakeouts and traps, and support has been holding strong. And when you have a well-defined bullish pattern after the halving, I mean, it just seems almost too good to be true that that's just going to play out without, something like this happening, or something like this, a fake breakout to the upside and a fake breakout to the downside. Is about how I would expect Bitcoin to react to a well-defined bullish pattern, such that the idea still kind of remains intact, but not too many people make money off of it. So much more important to me than this trend line for the ascending triangle would be this trend line, this bear trend line. And something that's really interesting is nobody seems to be talking about it anymore. Like, everybody's talking about it right here, and definitely a lot of people are talking about it in here, but nobody seems to be talking about it anymore right here when it's reacting perfectly. You come up, you dance around it, you break through, and then you turn it into support. And then you kind of have this fall down, like it looks like it's falling and going down, but the reality is it's just turning prior resistance into support. So, kind of something like this, where you break through the trend line and then you just kind of meander down it, but the whole time is now it's becoming support, while nobody really seems to be talking about it or paying attention to it. So this is one of the most interesting charts to me right now, is how, to me, we have clearly broken through this. It might be a head fake, for sure. The head fakes happen all directions, and this could just be our head fake to the upside. But to me, I can't really adjust this line any higher. I need this touch point and this touch point. So I can't really, it would seem a little silly to move it up here to me. So here's our touch points. And what's more important than getting above it is turning it into support. So now that we are above this, as long as it keeps turning this area into support, then we could be in a really good position to, really look like we're going to move down right before it pops and makes a strong move to the upside. And that's still what I'm expecting. Is if bears try to break down 9,000, not once, not twice, not 3 times, not 4 times, not 5 times. If they, the more times they try to break it down, the more times they fail, the more fuel they're putting in the tank for the bulls. And the other way could be said for sure as well. If the bulls try to support, and then they eventually, it breaks down, well, there's a ton of fuel in the tank for bears. So if we do maintain support, I'm expecting a sharp move to the upside that leaves everybody behind that was selling down in here. And if it doesn't, then I would expect this trend line to no longer act as support. And if we do fall back below this trend line, that would be a very bad sign for me, and would be a sign that I would expect below 10,000 for like 3 to 6 more months at least, which I just really don't. I really don't right now. So hopefully we can continue to support that trend line. Other one I'm keeping my eye on is something like this. I would not love for this to turn into resistance. This is kind of my average rate of return for this move starting in March. You're below it here, above it here. Here's our average. We could use that as a median potentially to put in some sort of like channel like this, such that if we break this down, then the target does become a return to the bottom. And with the current average rate of return of this move, that would be something like 82 by the end of this month. If we continue with this rate of progression, this fall overrun, opposite of rise overrun, does that work? And we fail to reclaim this median, and we come down to this channel support. Now that's something I would actually really like to see. And I could see there being everybody looking for 75, 7,000, 78, and having 82 hold as support would make a lot of sense to me for a number of reasons. First of all, let's draw a horizontal with this low from May 10th. And what we'll see is that, was an important area before. Resistance here, support here, and resistance here before a big breakthrough, and kind of support here before that move there. So clearly this does seem to be an important price based on where I would have this trend line, and this trend line here is based on it being parallel to this median and connecting to this low. So to me that's completely legit and valid. Most people would not ever draw that in, but I will do that myself often. So what else would we notice about 82.50 potentially? Notice our marker on the 4-hour is currently right at that level. So if we find ourselves in a situation where we have the buoy right here and the marker right there, and this penciled in channel trend line right here, that could be a really good spot to for this thing to move down, to not get to the level everybody's wanting to buy at, but to also, you know, turn everybody on their head that was buying up in here. That would be probably looking to have a stop loss somewhere in here. So I'm really intrigued by the idea of it doing something along those lines. Say 8,000 by the end of this month, and then 12,500 by the end of August. I like that. Okay. So I am going to be very bullish, basically, regardless of what happens. We would need to really break down 65 before I'm going to be changing my tune, and even then, I'm going to be looking at horizontal support from 3,000 to 4,000, thinking that that's going to have a very hard time to break down. So, I mean, it is really going to be hard for me to not be very bullish in the medium to long term, considering the medium term 6 to 12 months and the long term 2 to 4 years, we'll say, over that time period. Based on the recent halving and based on all of the money printing that has been going on, and also based on what we're seeing out of gold, I am really going to have a very, very hard time to hold my current strong opinion loosely. If Bitcoin is above 3,000, I'm going to be bullish over the next 12 to over the next 1 to 5 years. If Bitcoin is above 6,000, I'm going to be very bullish over the next 3 months to 5 years. So for me to actually turn bearish over the medium to long term, I would actually need to see us spend some time below 3,000. That being said, I'm not necessarily, I'm not going to be looking to hold longs from 9,000 all the way down to 3,000. No, I would be looking to do what I said earlier, enter in on a good setup, and then if that setup becomes invalid, to exit, whether it be at a small loss, a medium loss, or a small win or break even, to exit, and then to reset the sights and look to take another shot. And as long as I am continuing to effectively manage risk, the upside from these levels is so much bigger than the downside that I'm going to be assuming, that I am very confident that taking a good amount of shots when there's good setups on the table, and being flexible to give those positions room to work, to not get overly anxious and exit too soon, but then also to have a very, very well-defined approach for where am I going to be holding through positions that are moving against me, where am I going to be exiting, if I exit, where would I be looking to get back in at a worse price, where would I be looking to get back in at a better price. Having game plans for both directions. There's really only two directions that the price can go, up or down. If it goes sideways, it's probably not going to change your game plan too much. So just have a game plan for both directions. If it goes up from here, what's my game plan? I've got orders on the books to trim. I've been buying the beach and trying to trim near the sky, and then re-entering near the beach. So if we go up from here, I've got my orders set to trim at the sky. If we go down from here, I am going to be ready to quickly look to exit if we do not react how I want price to react. And I already outlined some very specific things that I will be looking for, some of which we're already seeing very nicely. And that was going to be, first of all, I wanted that 15-minute close definitely above this low, and preferably above this low. So notice how we did get this 15-minute close above this low. Then the next thing I said was I would need to see it back above 9,000 in the next hour. Maybe I gave it 2 hours. But here we got the close above this low, and now we are back above 9,000 with a nice engulfing candle, and this is a bullish engulfing. Many people don't realize that engulfing is only looking at the bodies. So being that this body is fully engulfing this body, this is a bullish engulfing candle, and now we're starting to see, you know, kind of what I'm looking for. In that, now that we're back above 9, we need to stay back above here. We can't get an equal and opposite reaction that has a sharp wick here, then sends it back, you know, down that way, something along those lines. And we also couldn't do one of these numbers that is kind of like this, but below turning prior support into resistance. We can't do that, and we also can't retrace back below here as far as I'm concerned. So therefore that only leaves us with a couple options to basically continue up and turn that into support like that, or to do the consolidation above 9,000. Okay, so again, just thinking about what both directions, what price can always go two directions, and if you're only prepared for one, that's when it's always going to go the exact other direction that you're prepared for. Okay, let's see here. Any questions? Yeah, no Kenny G solo. That does remind me. I got my American flag up. Happy belated 4th of July. Happy birthday to America. I had a great day yesterday. Out grilling, barbecuing with some of my best friends, drinking some beers and listening to some good music, playing some darts. Tough to beat a good day like that. Okay. Where would we see MSR reversal on the 4-hour? The trends go to die in the underworld, so that's basically where you would need to see price go to get a reversal. And if it just dips its toes in there and immediately reverses, then it probably won't do it. But in general, if you just look at the underworld, which is the area below the ocean, it's going to be this maroon color. If you just, the best way to estimate, just figure out what's the median of the underworld right here at 6,000. So if we get to 6,000, even on a wick, I would expect this to reverse. For sure, if we get to the bottom of the underworld 52, it's going to reverse. And then possibly, if we spend enough time towards the top of the underworld around 68, 69, that would be enough to reverse as well. And you'll notice how that's right in line with the kind of numbers that I have been saying, that you know, where I really would want support to be found before I would be changing my tune for like the medium term, and that is most definitely the 6,300 area. If we're supporting above that, we're all good. If not, then things change. Okay. Views on entering LPSY of distribution. Not sure how much I want to get into this. Yeah, I mean, it right here, I was very worried about that being the case. Right here. Right here. On June 27th, we consolidate support. We get this lower high here. Like this really looks like kind of the first LPSY. And then this should be the second LPSY, where here, notice how we kind of consolidate on top of horizontal, and then we never really break it down. Like for me, this really did look like a Wyckoff if this would have broken down support, consolidated below support, and then continued. It needed to be right here. And the fact that it almost did everything, but right at the point where it's supposed to continue, it went the other direction, that's when I started to think, huh, maybe there are a lot of people trying to distribute, but the bulls there's so much demand that yeah, maybe it was distribution, but it's actually reaccumulation because they're at these critical junctures, at these critical levels, it just fails to follow through. So for sure, if we break down from here, I could just see this being a little stutter step head fake that doesn't fit the archetype perfectly, but still does have the clear turning of prior support into resistance after the lower high. So for sure, this still could be the second. I would say this would be the last LPSY. Is that what he asked for? I think that's what this would be. If it does continue down, but each time it tries, it just ends up doing something like this, where you spend very little time there and you get these really bullish wicks. I mean, look at this 4-hour candle we're working on. Every time we've come down to these areas, we get these beautiful reversal candles. So yeah, I am open to the idea, but I was very worried about it right here. Now I'm just kind of, just open to it. I'm not, if it ends up playing out, I'd be like, yeah, okay, now I see it in hindsight and it was there. Didn't do anything about it. So if it does end up playing out, I'm not going to be, capitalizing on that. But I am at this point open to that being the case. So I'm not sure how much that helps, being open to something but not being open to doing anything about it. Am I really open to it? Not really. Okay, quickly wanted to show how my lovely ascending triangle might be turning to the dark side and becoming a bearish descending triangle. So we started out with this, we're paying close attention. We had the fake breakout here, was looking for this fake breakdown here to lead to a nice reaction up, and that didn't happen. This is where we started to get the signs of the LPSY of a distribution, and then boom, we turn this into resistance. Now so now it is a ascending triangle that it's not a head fake below, it's actually a breakdown once you turn that into resistance. So now if we just kind of do the inverse of that, what we may notice is now a potential descending triangle. There, so we make it red. So such a lovely ascending triangle. And now we're clearly getting lower highs, horizontal support. We could say that like that's our area here, or something like that. So if that did break down, call for something around 78. So now that I say that here's where I needed the Wyckoff distribution to follow through, and since it didn't, it's just kind of meh. But that's not the case about the descending triangle. Now this descending triangle is pretty darn well defined as far as I'm concerned. Lower highs, horizontal support. So if we fail to get above this, then it's just almost certainly got to lead to a breakdown. As supply moves down and supports, demand stays flat, gets eaten away at. But on the other hand, if we can get through here and do something like that, where, again, kind of like the same with the Wyckoff, this thing probably should be breaking down somewhere in here, and the fact that it isn't is just, the only thing that matters is supply and demand. And if you get to a certain point in price and there's just a big imbalance in supply and demand, it doesn't matter what patterns or technicals you have. The only thing that matters is supply and demand, and that's one of the main things that I'm thinking about right now is that, yeah, this supply is moving down, but this demand ain't going nowhere. From what I can tell. Okay, so very good close on that 15-minute. Now I want to see this 15-minute have no trouble taking out that high, which would be very important. We do see that that high is at a prior critical level. Working a Bitstamp's chart today for whatever reason, just what I happen to have on the chart. So we can definitely see that this is a critical level, and if this fails to get back above it, then that would be a strong sign that this reaction here is just kind of thrown back to turn prior support into resistance, something along those lines. If, like, what I need to see is 9,000 hold, and for that to be the case, it has to get back above 9,050 in very short order, or else 9,000 will not be holding. So paying very close attention to that, and we can take that out even further and just see what a critical level that has been. Okay. That's about going to do it for Bitcoin. Probably going to take just a minute to look at gold. I am not wanting to go on too long. S&P is rising in futures market. Why is BTC falling? I don't think that the S&P rising implies that Bitcoin should do anything. Bitcoin can do whatever it wants regardless of what the S&P is doing. That's just my opinion. Maybe somebody else thinks differently and would be happy to answer you. Okay. And I would also say that Bitcoin is not falling. At the time you typed that question, Bitcoin is reacting strongly from below 9,000. One day, 1 hour. That's weird. MCX for gold futures. What the heck? Jeez. All right. This is going to be wrapped up here shortly. That makes more sense now. We see that this market is open and has been for about an hour. Don't know what's going on with that other exchange. Okay. Paying very close attention to this top boundary here. Gold has been continuously testing this top boundary, and when you have a say a parallel channel, this isn't necessarily, but let's just say, for example, in theory, you have a parallel channel where price, it just wants to accelerate at a bigger rate than that channel, so it just kind of consistently tests the top of it. This is kind of what we're seeing here. Instead of it really oscillating from the top and the bottom of a channel, you have a clear, well-defined top area of resistance, but the price just wants to accelerate more than that. So it keeps pushing towards it, and then if it does break through that, that's when you expect it to go off at a much higher, an accelerated rate of return. If you think of a hyperwave, phase 2 or phase 3, both can generally be channels, and the next one starts when you break through the top of that channel. So that's what I've been paying very close attention to here, is that we've had this area of resistance that, again, instead of having a nice sort of oscillation from the top to a bottom, whether you want to put that channel all the way down there or something, up in here, it's really just being stuck at the top of this and suggesting that it really wants to move at a much bigger angle, and maybe it's starting to establish that angle now. Something like that. Perhaps is the angle that it would want to follow if it can break through the top. And here we do see that this is really kind of coming to a head in terms of there isn't much room left. Like we are coming to the apex of this, what could be considered a rising wedge. Sure, why not? And I've talked about before, I'll talk about it again, that I think rising wedges are tradable to both sides and that they're actually best when you have a rising wedge that breaks up or a falling wedge that breaks down, because what I just described is generally what happens. If you have a rising wedge that breaks up, it's a market that really wants to accelerate at a higher rate of return, so the risk will generally be about the same, but the reward will be much bigger than if you bet on a rising wedge to break down. You have similar risk, but you're going against the trend, and when it does break down, you know, coming to around here is about what you get, whereas when it breaks the upside, you could get a huge move. So I'm really wanting to see this thing break to the upside. I see no reason why it won't, now that we just keep, you know, putting in these higher lows, coming back to test it. It sure seems like that's ready to go, and if it does, it's probably going to go on a move like this. And I mean, you know, something to come retest these prior all-time highs. That would make a lot of sense to me. Or maybe this horizontal just ends up holding, and so does the top of that rising pattern. These horizontals have been my target for a little while now. I did take some profit up in there, and now I am expecting this support to lead to a breakthrough of both of these, but if it doesn't, then I think down around 16 is going to be a great opportunity to re-enter. So yeah, right now my position is trimmed with a break-even stop loss, so if it does move against me, I'll be in a position to re-enter at a better price, most likely. All right. Oh, that's gonna do it. Look at gold adjusted for inflation. That's a very interesting one. I'm not sure. I wouldn't know how to pull that up, but yeah, send me a ticker. That would be definitely an interesting one to take a look at, and definitely seeing some very good signs of a potential cup and handle here. I mean, this has got all the makings of a cup. And if this does hold, that area at 1600 where I was telling you would be a potentially a really good area for like a handle, which would also be this kind of head, shoulder, shoulder. Would love to see that. It's interesting that the inflation adjusted has already made a handle. That doesn't make sense. It seems like it'd go the other way. Yeah, I don't know. I'll have to check that out. And what's up, David Chudzik? Glad to have you as part of the Telegram groups and MSR Indicator. We did just have the scholarship for June was given away to a few lucky winners, so congratulations to those of you. It's nice seeing you around, and we'll definitely hope that you are able to gain some, to make some gains with the new indicator that you have access to. Just having one other thing kind of jump out at me here that I'm wanting to take a look at. in the past we had been keeping our eye on the kind of parabola that was establishing itself. That happened. Yeah. So they are going to continue keeping an eye on this parabola here for any pullbacks to, again, be looking to buy around that area. And what about this? Almost a good channel. Okay. That is going to do it for me today. Thank you, everybody, for tuning in. It's been a pleasure to come at you guys with some charts and some analysis. Hopefully that will help you all in your own analysis to see how I use these different indicators in real time and to see how they can be used to complement one another on various time frames to help to get an idea for when everything is fully lining up and telling you, all systems are a go versus when there are some yellow lights or red flags to be paying very close attention to versus when it's full on red light and time to go ahead and pull a trigger on an exit, whether that be in profit or not. And for anybody that is interested in learning more about MSR, please come on over to Sawcruhteez.com, and on the homepage you will learn about the investor mode, which is for managing longer term positions, retirement accounts, that sort of stuff. We'll tell you exactly when to buy, when to sell, and how much position should be exposed. And then over at trader mode, we cover video and text covering all of that stuff, real-time trade example, and anybody that's interested in scholarship, if $500 is more than 10% of your trading portfolio, if you basically trade less than $5,000 a position, then you qualify to apply for the scholarship and give away one scholarship every month, and a full scholarship will come with access to the webinar as well as the indicator, and have been getting a lot of good feedback so far, and that's been really exciting to hear from people who have been successfully implementing the new tool that is now available to improve upon their return. So thank you all very much for providing feedback, whether it's good, bad, or indifferent. I'm always interested in hearing people's experiences with that indicator, and also with the stream I'm doing here on YouTube. So if you can smash the like button and share this with anybody who you think would be interested in following along with my analysis, I would very much appreciate that. Hit the subscribe and make sure to tick the bell. I do have some big changes coming up. I've been talking about for the last couple weeks that in the next month this channel will be very different, and that will be the content that's covered, the people that are on, and also the names. So everybody keep an eye out. I will be going out of town here in about a week. We'll probably, the next couple weeks may be sporadic about when I do streams, if at all. We'll do my best, and then after starting the third week of July, I'll be back in town and ready to roll up my sleeves and get into the new process, the new routine with the new stream. So thank you, everybody, for your support. Really appreciate it, and we will plan on catching up with you next time.